Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after a week of strong momentum following last Monday's flash crash, the Australian dollar took some profit on Friday as traders returned around the peak of 66 cents, while the US dollar, which measures the greenback strength against a basket of six major currencies, was flat at 103.20. This week's economic focus will be on the Australian Wage Price Index and the Australian unemployment data. While globally, key reports from the US, including the Consumer Price Index, the CPI, and also the PPI, or the Producer Price Index, and US retail sales for July, which are likely to be closely watched. These reports are crucial as they may offer insights into the likelihood of a soft economic landing. The worst case scenario, though, will be if Tuesday and Wednesday's inflation reports show higher than expected price increases at both wholesale and consumer levels, while other data may reveal a sharp economic slowdown. Turning to the technicals, the market is somewhat bullish as the RSI and also the MACD are marrying up to support a bullish case, but the ADX supports a ranging market. Nevertheless, the upside potential looks towards 66.45 to 66.90, with any pullback likely to be shallow and see support around 66.65. Considering how volatile the market's been, traders should remain cautious and closely monitor signals and adjust risk management strategies in case of any high volatility, given last Monday was very, very high. After a wild and crazy week, the euro dollar wavers after hitting the topside target of 110, after the US job report revealed a sharper than expected decline in hiring, heightening concerns that the economy rapid slowdown due to high interest rates. Despite this, the Fed is anticipated to cut rates in September, although there is some debate over a 25 or 50 base point reduction will be seen. Nevertheless, traders will be closely watching the Fed Chairman Powell's speech at the Jackson Hole Symposium on August 22-24 to get some insight in how the central bank is viewing September rate decision. Moving on to the technicals, though, the market is expected to show some weakness at the start of the week, but may find support around 108.7080, and therefore could see a bounce on and retest this key level around 110 that may extend on to 111. As I still feel the dollar index will take a further challenge to the downside and remain focused on the low 102. Turning to dollar yen, the rebound off that key level of 142 has displayed 3 consecutive days of strength, but now looks like it's running into a bit of resistance around 147 figure 15. I do anticipate the market may fall towards its top side, and therefore we should not rule out another downside test around that 142 area. But like as I always say, traders should continue to monitor signals and adjust their risk management strategies accordingly, as volatility has been high and likely to continue to. Sterling posted a bullish outside range day or an engulfing candle that waits confirmation. A close above 127.60 should support further bullish case and see the market break out as a recent downside move, and furthermore look on towards 128.60 as a potential target. That may lead on to 129 and reassess, with any pullback likely to be shallow with support seen at 126.7580. Turning to gold, the market did maintain its bullish bias as it recently broke through that 2,400 and posted a Marubozu candle, and therefore could see further gains that could lead on beyond 36 to 41 and head towards the region of 2,454 to 58. With the broader aspect, though, I'm not ruling out that we could even extend on to 2,500, given the fact that this market is still relatively strong, and therefore any pullback is likely to be shallow with support seen around 2,416 to 19. Wrapping up with oil, the market is expected to continue on its bullish trek since bouncing off $71 a barrel and looks up towards 77.60 or up to 78.5 as a potential target and reassess from there. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new week.